Alright guys, welcome back. Luca Santos here from ACY Securities, Technical Market Analyst, and now host of the podcast ACY Cast. This is Peter. Welcome, Peter.
Thank you.
We're gonna be interviewing Peter today. Peter Pan is the fundamental analyst, right?
Yes.
At ACY Securities, and he brings a lot of knowledge with him to chat with us. But first, I just wanna, do a brief introduction on the podcast and what the podcast will be for, right? So yeah, I'm a trader 4 or 5 years now, and I always like to listen to other traders as well to see their ideas, to see how they trade, to see how they answer market, analysis, how they do everything, how a professional trader works. Like everyone has this question as a trader, don't you? So I was like, yeah, I'm gonna take this ACY cast back, and I want to be the host, and I want to do all the effort. And I want to thank Henrik and I want to thank David as well to be supporting us with all the knowledge and all the ideas behind this podcast. So thank you guys. So please like, comment. I want to see a lot of I want to see a lot of comments, interaction, and subscribe. Subscribe to the channel. It's free. It won't charge you anything. $0. All right. So Peter.
Hi, morning everyone.
Thanks for coming, man.
Thank you.
It's my pleasure to be here with you. 8 years of experience on the market.
8 years.
8 years.
Yeah, I'm
8 years.
starting from the worst market in the emerging market.
China?
China. In 2015. At that time, all of those Chinese stock market is crashing.
Yes.
And I have made a big loss actually, a very big loss.
Can we ask how much?
You can't. It's too big.
All right. Okay. That's a bit.
Yeah.
That's a lot.
So I starting from the worst market, and I experienced the best teacher. I think is
Really?
the loss.
Oh,
right?
true.
The loss is the best teacher. So from the start, I have learned a very good lesson. Just don't be overconfident. Just don't be overconfident, because everything you know may be changed just in some uncertainty.
Yeah.
So you never know what will happen to the market. Especially the market reflects the expectation of the entire society, right?
Correct.
So the expectation will change quite fast. It will change from fear to greedy, and suddenly from greedy to fear. You don't know. So whenever you are trading or investing, you need to know there is uncertainty in the market. That's the first lesson I learned from.
Wow,
from
guys,
emerging.
that's already a very, very good lesson to us. Yeah. And I remember as well when I started to trade, and I had the same concept as you. I think the losses are my teacher.
Yeah.
And it doesn't need to be big losses, but you need to know why did you get wrong.
Yeah.
You need to revisit those trades and see, oh, okay, this is why I didn't get right, or maybe I wasn't following my trading system or something like that. That's pretty good. That's pretty good. So afterwards, from the Chinese stock market, you went to G10 currencies. How you ended up in Forex?
At first, I come to Australia to study my master degree in USYD Business School. So at that time, I have already get access to some knowledge of the economy, of the total global environment.
Yes.
So from that time, I start to trade like Australian stocks and also Forex. I'm interested in that, especially when sometimes we will see that the stock market is based on the expectation. So sometimes you are quite uncertainty about that. But for Forex market, most of the fundamental news you can easily get from the news, from the report you can easily get. So it will be more interesting for me to trade Forex. And you can definitely see the difference between Forex and stock. You can learn more at the start, learn more from Forex market.
I completely agree with that, Peter, because, let's say central bank X is raising rates. So let's say Australia, like this week, RBA raised the rates. Soon as they release the monetary policy, or maybe they release the minutes, it's everything in there
Yeah.
So you can read, you can see how much they're expecting the numbers. If those numbers don't get met in the next month or 2 months, shown as the new rates meeting, then they will raise or they won't raise. So the answers everyone is asking for is already there.
Yeah.
So I completely agree with you, and I think, you know, my process to trade Forex as well was quite same as yours. So I feel good now. So maybe I can be on your level one day.
Yes, because everyone is trading in Forex. Not trading. It's like because the Forex market is everybody focused on, a bit like the banks are trading or
Yes.
like hedging their
exactly.
currency.
Yeah.
So the future market and the forward market of the Forex is a very big market. So you can't like just one institution investor to control the market. You can't. It's not like stock market.
No.
Some stock you can control it. No, in Forex you can't. And because everybody is focusing on that, so you have many tools to like tracking that. For RBA, we have RBA rate tracker.
Yes.
For the interest rate swap market.
Yes.
And for Federal Reserve, we have FedWatch. And for like Europe, UK, we have Sonia or something. Yeah, every single swap market rate, we can see the expectation of the traders in the market.
Yes.
So that's very easy to use, and that's very useful. Yeah.
On this question, you know, because I'm a big rate trader. I like to trade differential between one country to another. So for those who don't know what is a rate trade, would be not a carry trade, but would be, let's say, if US has more possibility to raise into the next meeting, and let's say Australia, on the minutes, they say that they will wait for those numbers, and if those numbers don't get reached, they will pause, and those numbers don't get reached, and you know they will pause because that's what they say, then I will buy US dollars over Australian dollars. So I would short AUD USD. So, you know, just coming back now, do you think this is long-term profitable? Is this a good strategy to use, looking only to the rates?
Yeah, actually, I completely agree with you.
Cool.
But a little bit different is I completely don't agree with carry trade.
Yes,
because in interest rate parity, which is just a theory, but I believe, is that the higher the interest rate, the currency value in long term will drop. Interest rate parity theory, but in short term, if a currency have a higher possibility for hiking, in short term, the currency value will goes up than the other currency. So in short term, it will goes up, but in long term, it will goes down.
Wow.
Yes,
Okay. That's
that's
good,
my thought.
actually.
So in short term, yes, you can do that. But if it's like we compare the USD and JPY, right? So the US interest rate is 5.5%, and Japan interest rate is 0.1%. Yes, in short term, because US is still hiking, US dollar is still going up. But if it stop hiking, the USD will start going down.
Yeah.
And in long term, I think USD will, compared to Japanese yuan, will keep going down. It's not like current trade. I don't believe in current trade.
Okay, so coming on interest rate now, you know, we had Australia raising 25 basis points. To be honest, I was expecting it.
Yeah.
I was like...
Actually, I was expecting more.
Yeah, you told me you were expecting
50 basis
50.
points.
Yeah, I was like, man, if we go for 50, then it's going to be a problem.
I said it's a very small possibility. I don't think it will happen, but it may.
Yeah, but well, they raised, and that's the point.
Yeah.
What are your take on that? Because we can see Australian dollar, especially AUD JPY at the moment, being into the clowns, into, you know, skyrocketing. We all know that on the, you know, as you just mentioned to us, in the short term, raising interest rate will be good for the currency. So we'll make the currency stronger, will give strength to the currency. Can you elaborate a little bit more? What will this impact in Australia on the mortgages, you know, all of those things to us?
It's a little bit complicated.
Okay.
I will start from basic.
All right, cool.
So normally we will see the Australian dollar or a country's currency, the value of it is based on the bond yield. So the higher the bond yield, normally we will take like 2 to 10 years bond yield as an index to see. It is because in Western or like developed countries, they all use the same system, central bank system. So every single dollar it has produced, in the back of it is $1 value of a bond. So that's the reason why people will trust your money, will trust your currency. So the value, in theory, the value of the currency is the bond. So the higher yield of the bond, the higher value and the higher currency value compared to other currency will be like that. So when the interest, when the Federal or the RBA just hike the interest rate, the bond market, the bond yield will goes up. It will first influence the short-term bond yield and then influence the long-term bond yield. But there is a difference. So for long-term bond yield, we are talking about 2 years above. It will be more influenced by the expectation of the market. So in recent 2 months, the RBA is over-expected. People will think it will keep the rates at the same level, but it hike. So it changed the expectation. So that influenced the long-term bond. But when we see the short-term bond, it goes just the same as the Federal hike the interest rate. So it's not only in the bond market for people who don't familiar with bond market. You can see the mortgage market. So the variable rate is going up just at the same time the Federal hike the rate. But the like 2 years or 3 years fixed mortgage rate is not going up in the last 9 months for the 4 big bank. It is keep going down. It is keep going down because the expectation is going down. So long-term bond yield is based on more based on expectation, but short bond yield is completely based on the interest rate hike. That's the difference. And long-term and short-term will both influence the market, but the AUD is more focused on the long-term bond. And also the USD, also the Europe is more based on the long-term bond.
So, so that's, well, thanks for that, man. I didn't know that because, no, that's for real because I thought, I knew the bonds. I knew the part of the currency being correlated with the bonds. I knew that. But I didn't know that you have the long-term and the short. Not like the short term, but like the 10 years would be a long-term bond and the 2 years would be a short-term bond. And like US, AUD and Europe, let's say, as you just mentioned, will be more linked to the long-term bond, not the short-term bond.
It is very interesting question is that if we see all of those financial instruments, we can see the stock market is completely based on the expectation. The long-term bond is like 15 points based on the expectation, but the short-term bond is normally based on the actual policy. That's the difference. Cool. When we trade all those instruments, we need to know the difference about that.
No, that's 100%. And well, another thing here, Peter is a CFA tier 3, isn't it?
Yes.
Yeah. So you done the 1, you done 2, and then you done 3.
Yes.
Okay. So guys, I have lots of questions from Instagram, and I think everyone wants to know what's the big difference to have a CFA and don't have a CFA, and what will give you, like career opportunities wise, So is it valid to have one? Because some people say it's not, some people say it is. So what's your take on that?
CFA is teaching you a lot of basic things, but it covers a lot of subject. But the best thing behind it is that it will relate all of those subjects, like it will relate bonds to the equity market, to the Forex market. It will relate all those.
Combine everything.
Yeah, combine everything. So you will have a very strong basic theory knowledge to understand the market. That's the best part. So when we say financial, actually the topic is just two. The first one is risk premium. Like the higher the risk, the higher the return. That's the risk premium. That's the first part. And the second part is discounted rate. So future cash flow and combined into the current price. Just these two.
Okay.
All the financial subjects is talking about these two topics. So when you study CFA, you will just go around these knowledge, two topics, and you will have strong knowledge base. Second, strong confidence in your theory knowledge, and also it will teach a lot of like unrational thing, like the market bias, emotional bias. That will let you understand why the market is greedy, why the market is unrational. So it covers a lot of things. It will let you know the price change has combined a lot of things like discounted rate, the risk premium, also the market sentiment.
Wow.
Yeah, you will not like just based on the sentiment to trade or just based on the fundamental trade. You will have a more general knowledge.
Wow, well, I've just from this explanation, and CFA gives you like all of this bunch knowledge. So I think it's pretty valid.
Yeah.
I think it's very valid. Even if you are a trader and you don't trade for institutions, I think having this knowledge and testing this knowledge on a proper course that it's recognized all around the globe, I think it's very powerful to have.
Yes.
I think.
Yes.
All right. Congratulations for that, man.
Thank you.
Congratulations. Yeah. When did you done that?
Like 1 year ago. Yeah.
Okay.
I finished all 3 levels and have the enough working experience. It needs like 4,000 hours of related working experience.
Wow.
Yeah. So
4,000 hours.
Yeah.
That's a lot.
It's not a lot as you think, because we sometimes do overtime, right?
Oh yeah, we do a
so
lot.
it increase quite fast.
But it's fine, okay? It's all right. We like what we do.
Yeah, we like to do overtime job, especially when talk to the clients, talk to the traders.
Yes.
I really like that.
Yeah.
Yesterday I have a seminar and people are asking questions. I very enjoy that.
That's very
asking.
cool. Yeah, that's one thing, from the Instagram. I really like to express for them. I don't want to hear them. I want to see what questions they have and try to help them,
Yes.
I'm not the smartest guy. I'm not. And I always learn from someone. Yes. I'm learning from you now. And maybe you can learn from me. I learn from them. Everyone has something to share.
Yeah, just as I said, don't be overconfident. Always looking for opposite point of view.
Yes.
And you will like test your knowledge, test your theory, and will level up your skill.
Cool. That's a very good mindset trick as well. Don't be overconfident. That's very good.
The first lesson, right?
Well, that's the first lesson we got in there.
Yeah.
Okay. So now I want to talk a little bit more from this. I don't even know what's happening anymore because U.S. debt ceiling. Is this going ahead? Isn't it going ahead? Is this going like 2025? They make a law. What is happening like?
So it combines 2 parts. The first part is long term. The second part is short term.
Right.
For long term, I totally agree with Ray Dalio. The water bridge.
Bridgewater. Yeah.
Bridgewater's
very big trader. He's very knowledgeable.
Trader. I admire him.
Me too.
Yes. And he said that we are in a bond circle. So the government is using bonds to leverage up the economy.
Yes.
It is a good thing, but when we see the the government deficit is keep going up, it is a bad thing. So in the market, the money has 2 parts. The first part is cash. The second part is credit. So the credit level is from like borrowing, right?
Yep.
It is a good thing.
M2 money.
You can see. Okay. You can see M2 money is covering the credit and the cash, right? So it is a good thing to use some leverage to higher the credit. It will escalate the economy. But now is that the credit is just too high, so high.
Yeah.
especially when we see the like property market. We can normally there will be an index is the median house price divided by the median income house income.
Yep.
It is going up so fast, so people can't afford property market
To live anymore,
Yes,
basically.
there's too much leverage.
Yes.
There, especially in US and also in Australia.
Australia, wow.
Especially Sydney.
Sydney, yes.
leverage is much more than a lot of countries in a lot of cities in US. So it is a very dangerous thing. Yes, that's the reason. A part of the reason why the property market is going very very high, like 40% median home price in just 2 years,
Yes.
40% raise, and also the rent.
Oh yeah, the rent. I want to talk about
Yes.
that. Man, it's going
But just
crazy.
one part. The other part is the immigration. But I think in long term, the main part is the leverage.
Yeah. Look, guys, you know, I was reading a Credit Agricole, if I'm not wrong. I think I've even showed to you the chart. I don't know. I don't remember. Anyway, so I was reading a research paper from an institution, and I was impressed how much the rents are going up in Sydney, because what they done is they took the price of the property over 3 years, and they put the rent price over 3 years as well. Man, the discrepancy between those two prices are huge. The rent just goes up like more than 50-60% in these 3 years, and the property price is still going up, but not that much. There is a huge difference.
Yeah.
People won't be able to afford anymore.
Yes.
You know, like this leverage is good, as you say, but it is hurting a lot.
Yes, and house income doesn't rise that fast.
Exactly.
Yeah.
Yeah. Well, I hope everything can get better soon, man. Otherwise,
we will definitely get some pain. All of us will get some pain. Yeah.
Anyways, all right. So I have a few Instagram questions now. Okay. All right. So let me have a look on my thing. Are you learning something, Dave? You better do, man. 100%. Okay. First one. How to become a profitable trader? No, this one here. So the guy mistrades due to the lack of confidence. How can he have more confidence on his analysis?
Yeah, so confidence you should build time based on step by step. But first of all, I think for normal people, you need to raise your win rate. Win rate doesn't mean anything actually. So we can have like low win rate, but every time I win a lot. That's a strategy.
Okay.
And also I have like high win rate, but every time I win, I have a low profit. It doesn't matter. All strategy is good, but if you are a starter, you need to start from the high win rate, because if you lose a lot of time, you will lose your confidence. And how to use that make it higher win rate is that follow the trend.
Follow the trend.
So sometimes we will say that if the trend is going down, I will buy, and I will wait it goes up. But most of the time, it will keep going down. Yes, it will just crush your confidence. For trading. So I think people, especially for new starters, you will follow the trade. My point of view for new trader is just adding a 200 like moving average.
Okay.
200 level term moving average. So if the moving average is going up, just buy. If the moving average is going down, just sell. Don't buy, just sell.
Follow the trend.
Yeah, follow the trend. It will higher the interest rate, higher the win rate, and it will build your confidence at first.
That's really good. Yeah. See, you have. Now, what are you gonna do, Dave? Put the 200 moving average on your chart.
Yeah.
All right. So another thing is, follow the trend. I think this is when you have to use your technical analysis to see where the border is breaking or where the top's breaking, and making higher highs or higher lows. But most of your analysis, I can see, same as me, is fundamental.
Yes.
Because Forex as we mentioned beautiful in the beginning, is a people game. You know, it's society game. It's how the society is living, is rates, is mortgage, is everything. So beautiful. All right, another one. How the market? Okay, that's a good question. So since you started, how the market evolved through your career until now? Do you think it's lots of difference because you got the crash? Not the crash, the crisis. Do you think it's easier to trade now, or you think it was easier to trade there? How did it evolve between now and there?
Because at the time 2015, I don't have a lot of knowledge about the financial market, but now I have. But that time experience has taught me a lot of things. I know the circle of the market. I know the bond and property circle. Like it won't goes up forever, right?
Yeah.
So now I think for new traders, it's not a very good trading time because the market is volatile.
Okay.
But for me, I think it is I have more experience to do tradings in the current market. I will have more confidence when the market is crashing, especially currently emerging market. When it's crashing, I have more confidence to take knife, right?
True.
Yeah,
True.
right. Not recommending for new traders.
Please,
okay?
guys, don't do it.
Yeah, but I have more confidence for myself, but because I know it is a circle. The circle will keep going forward. I think it will be a stage inflation there, and I will, based on my stage inflation expectation, to do my trading to build my portfolio. Yeah.
That's awesome. Very good. Another one. All right. So now I think will be the last Instagram question, and then we go for just one more question, and I want to ask you. That's secret. You don't know, so I'm going to ask you one thing. He don't know what I'm going to ask. So last one. Say Peter wants to build a position in any Forex pair.
Yeah.
How long does it take for him, and what does you look at first?
Okay. How long will it take?
Yes.
Normally, like, it depends. Whether I want to do a short term or daily trade or like short to medium term, it depends. If it is a daily trade, I will just take like several hours to think about it, and after when it gets to my expected point, I will buy or sell. Yes, that's in a short term. But if I want to hold the position for 1 month, it will take longer. 1 or 2 days, wait it to the best position I expected.
Yes.
So that's and what I will see. It's very simple. There is a completely basic series behind that. So currency is based on like expectation of the future policy, right? And the future policy is based on data, especially inflation. So the most thing I focus is on inflation, but it's on both countries' expectation. The interesting point in Forex is that it is built on two countries economy, two countries inflation is not like stock. It's based on one country.
Correct.
So you need to compare two countries. The inflation is going up. Like recently, I changed my mind for the Australian dollars, especially last week, right? Because the inflation in Australia is going up, but the inflation in the United States is going down.
Yes.
That's the main difference. So I will buy Australian USD in short term based on that.
Correct.
Yes, inflation is the most important point, but also a lot of different things we will see. Yesterday there was initial job loss data. It is bad. So the USD just crashed a little bit. Yes, that's all of the data matters, but the most important thing is the inflation.
Yeah. Look, just my point on, because I find this pretty cool, your answer. The first thing I look to see if the central bank will raise or not is the inflation. Because this is the gauge.
Yes.
This is whether we look first. Is the inflation going up? Is the inflation stagnated? How it is? So now you know. Okay, and you already touched on these, so good Instagram questions. So thank you for answering those questions. Are not my questions, are good Instagram questions. Now, you mentioned soon as you was answering this question about the Australian inflation, right? Do you think, because, well, when we compare Australian inflation around the G10, Australia is only losing for UK.
Yeah.
Right? So we have the second highest inflation in the G10 group. Do you think it will continue to go up? Do you think it will stagnate? Because we live here, for those who don't know, we are in Sydney and we can feel it.
Yeah.
We can feel it.
Yeah, unfortunately, I think it will still going up. Two parts. The first part, if we see those inflation like every subject, like the food, like the energy, all of those, we can see most of the inflation items is still keep going up.
Yep.
That's different from other countries,
Yes.
other developed countries, even different from New Zealand.
Yes.
So that's the main point. I think the inflation will going up. The second point is that immigration is going in. The rent, which is the most part of the inflation, the biggest item, will still going up, but in short term. But it still will pull the inflation keep going up. And there is a third one.
Okay.
The third one is the property price.
Yes.
Because the expectation of the future interest rate has going down in the last 9 months, right? So people are starting buy property just from the second season this year.
Yes.
So in March, in April, and in May, the Australian property market pick up.
Yeah.
Just at the same time, the US property market is picking up.
Picking up as well.
Yeah, picking
So
up
there is
as
a
well.
correlation there.
Yeah, an entire correlation. So when we see the US and Australian property market is starting going down, is last year, July or May. At the same time going down, at the same time going up.
Yeah.
So I do think when the property market goes up, people's confidence about the economy will goes up.
Goes up as well.
But it's bad for the inflation. The inflation will still keeps going up.
So next we can maybe feel a bit more this year.
Yeah, especially people are blaming the RBA.
They
giving
always do.
a lot of pressure on
They always
RBA.
do.
And also Lowy will may not be able to still be on the position in September. And the central bank will be divided by two parts. That's all negative signal for them to keep hiring the interest rate. People may feel relief, but the inflation may be still going high.
So we can still, who from Australia, unfortunately, we will be feeling a bit more. And with that, as we just mentioned, inflation is up. Central bank will continue to raise.
Yes.
Okay.
I think so.
Cool. All right. Thanks, Peter. Thanks for that. Now,
Final question, right?
final question.
Okay.
All right. So let's say you're talking to me. I just begin in the market. What would you recommend me? 3 books to read and 3 things to do.
3 books to read. Okay. I would definitely recommend to all those Ray Dalio's books.
Awesome.
Also CFA, of course.
Okay, cool.
Right, but Ray Dalio, don't need to read the book, but because the book is spends a lot of time. I think you can start from the video. Ray Dalio has recorded a lot of video.
Yes, I know.
And a lot of those videos are very basic fundamentals. I really like to repeatedly watch his videos.
Yes,
I think that's the start point. And like books, yes. I really like the Ray Dalio's books. I think there is a book called like Bond Circle.
Bond Circle, yes.
Oh no, Bond Crisis.
Bond Crisis.
I really like that book, especially when you talk about the U.S. like bond ceiling. It is really very related to that book. Yes, that's what I think. you should know, especially when you start a financial market, you need to know everything is related to bond. So starting from bond. Yeah.
There you have it.
And but you normally want to trade bond. But bond is very related to Forex, so starting from Forex.
So
learn from Forex.
Would you say always keep a look on the bond market for sure?
Yeah, always, always.
There we have it. So you have
bond
the book.
market is the start of the market. Yeah.
Okay, so the book Bond Crisis by Ray Dalio.
Yeah.
And the tip, watch his videos.
Yeah.
And I think that's it.
Yes, and if you want to trade, starting from Forex. Don't start from stocks.
From Forex.
If you want to invest, I would say starting from index. But if you want to trade, if you want to learn something, starting from Forex. It's a good teacher because it's not based on complete expectation for just one company. It's based on the entire market, especially the bond, US bond and Australian bond, and the difference between two economies. That's the best one.
If you want to start trade, start with Forex, and for your lucky, we provide Forex on ACY. So yeah, if you don't have a broker yet, we have one of the best spreads in Australia. So have a look down below the link. And yeah, guys, I think that's it.
Okay.
Thank you so much, Peter, to come here, and look forward to the comments, to the interactions. If you guys put comments, put questions, we'll forward to Peter if it's just fun for you. And then I see you guys on the next ACY cast. That's all for today.
See you.